Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Wednesday, the 17th of May. Starting off as usual with the FTSE 100, where we've got this extended dance either side of the 50-day moving average. That's the blue line there, around 77.20. Above that, we're looking for, well, at least initially an end-of-day close above 7800, which has been recent resistance, and then up to that February resistance line there, 78.85 at the moment. The big break of that line would then hopefully open up 8,000 plus. Best case scenario at the moment up to the top of that rising September trend channel, 8,300. Hopefully over the next or the following 1 to 2 months after breaking that line. The other point to note is that post-February we've got an inverted head and shoulders, and we're hoping with that right shoulder then break the neckline and give us up to 600 points of upside, but that may be a little bit too keen given the current market situation. On the downside, below the 7780 area, then 7630 in April support the possible destination. Moving on to the DAX. Here we've got the same picture as we've had for several weeks now, actually. So the old resistance, new support, 15,700 looks like the base, and above that we're looking for an eventual breakout, end of day close above 16,000 to give us a target towards 16,800 as soon as the end of next month. For the Dow, obviously no breakout to the upside. In fact, we're hoping that we can avoid a break to the downside. At the moment, we've closed below the 50-day moving average around the 33,100 level, risking a move down to the floor of that rising trend channel from September around 32,600, and probably the way things are, better to get that out of the way, and maybe even more on the downside out of the way, rather than the sort of persistent failures to break to the upside that we've seen over the recent past. That inverted head and shoulders now looking as though it's almost been broken, but maybe we're a day away from finding out exactly where we are in terms of the charting pattern there. Moving along to Bitcoin, and also a bit of a lazy price action situation, 26,700 there for March as the support. We sort of probed below that and trying to hold above that, but looks as though, again, this may be a market that needs to actually break down a bit more, maybe 25,000 and August to February's resistance before we can actually break up again. RSI well below the neutral 50 level at 39. Moving on to the stocks, and a stock which I suppose could be classed as a bit of a falling knife in the recent past is Asimilar, but a 30% rise today, bullish divergence. We just need to break that line of resistance there from March to around the 1.25 pence level, so anything above where we are now, and that could give the shares at least a boost up to the 2 pence area, the 50-day line, and also fill that gap down from April. But interesting that we've had such an active move there for the shares after such a long period in the wilderness. On to Ananda, which had a very good announcement today regarding patents, etc. Here you can see that the support area is around the 0.6 area, looking for that to hold. We've had a golden cross buy signal with the moving averages there, the 50 and 200-day line, so hoping that 0.6 area will hold, and then we can head up to the top of that broadening triangle from February last year as high as a penny over the next couple of months. At this stage, while we're above the 50 and 200-day lines around 0.5, we're feeling pretty chirpy in terms of the upside. Last Friday, I covered Chaarat Gold, and was suggesting that the shares could hit as high as 16 pence by the end of next month. If you look at the chart today, you can see that the high today was 16.25, so I think that's full marks on that, although obviously it was a bit conservative on the time frame. Here now what we're looking for is that the shares remain above the initial May resistance there, around 10.5 pence above that. We're looking for a retest of 16 pence on the top of that June triangle from last year. But you can see the power of using triangles on charting, really very, very useful. And sometimes, on many occasions, you can get the exact high or obviously the exact low, depending on what is going on. On to Cellular Goods, which reminded us of its skincare offering, which I'm sure everyone's going to be rushing out to buy. Here we've got a good consolidation around the 200-day line. That's around 1.25 pence above that. We're looking for the shares to retest May resistance around 2 pence. ideally we stay well above the 1 penny area, which was the floor, or is the floor of that bull flag or consolidation flag that we have over the last week or so. Moving on to a stock which I haven't covered for quite some time, Europa Oil and Gas, and here we've got a decent move with the shares trying to break or gapping through the 50-day moving average. The situation now is that the longer we stay above the resistance line 1.1 pence, the more the chance of a move back to February resistance around 1.35 or 1.4 pence. Moving along to a stock which has been one of the heroes of the spring to date, we've got Hummingbird Resources. Here the big trend line break there around 7.5 pence. We hit up our first target there around 15. Looking for a final target there over the near term as high as 24 pence, while we remain above the 15 to 16 pence area. So a decent situation there. On to another stock which is pushing along with its bull scenario, Kinovo. Here we've got a rising trend channel which has been in place since April last year. Top of the channel there around 60 pence, but I think we can actually upgrade the upside now. Widen that channel up towards the upside there, with the top of the channel there from late 2021 heading as high as 85 pence, maybe on a 2 to 3 month view. Rising 50-day line, rising 200-day average, and good RSI rebound around the 50 level. So hopefully Kinovo can come up with the goods. On to Myriad, which I suppose a lot of people would be looking at the moment. Here you can see that there's been a decent consolidation, basically with shares finding new support around old March resistance in the 3 pence area, above 3 pence, looking for a retest of 6, which was early May resistance and best case scenario target by the end of next month, up to 7.5 at the top of that December broadening triangle. Onto a stock which I haven't looked at for quite a while, Nuformix. Here you can see that we're in a broadening triangle, hopefully a broadening triangle base from back in the end of last year. Top of that triangle heading towards 0.45 pence. The good news here is that we pushed back above the old January support there at 0.25 and above 2.25, looking for 0.45 on a 2 to 3 month period. If you are cautious, you wait for an end of day close above the 50-day moving average at 0.3 before targeting 0.5 there, and ideally, obviously, the longer we stay above 0.25, the better on that situation. Another situation which is pushed higher is Protium, and here we're in that rising trend channel from back in 2021. Top of the channel there, 6.5 pence, and above 4.5 pence, which looks as though it's been beaten. We should head to 6.5 pence perhaps as soon as the end of next month. Stock which has had quite a lot of detractors, to say the least, has been Supply Me Capital, but looks as though the shares are making good ground here. We've got that bull flag, V-shaped bull flag consolidation, a bit like the Myriad one actually, and above 0.08, looking for up to 0.18 by the end of next month. Obviously, it'd be nice to see 0.12 broken in a convincing way to give us more confidence of the upside. Just a couple to go now. First one is Woodbar. And here you can see that the shares have made good on the recent push through 0.45. Above that, we're still looking for the 50-day moving average as high as 0.88 or 0.9, which obviously seems rather ambitious. Normally, in such situations, when you've had a big gap down, at least half the gap level, or the width of half the gap, is going to be the target. So in this case, it would be around 0.75. But best case scenario here would be up to 0.9 by the end of next month. That's only valid, though, while we remain above the 0.5 or 0.45 area over the near term. Another stranger to the bulletin board heroes to finish off. Here we've got Xeros, and here looks like another broadening triangle base. Here you can see the broadening triangle from the end of last year, and if I can get the chart up there, bear trap reversal, and above the old low there from December at 3.9 pence, we're looking as high as 5.5 pence over the next 2 to 4 weeks. That's it from me today. More updates tomorrow.